Assalamualaikum and hi. Today my group and I will be presenting. First of all, my name is Ain Zuliana. So let's begin with our business overview. Bernzi Sdn Bhd is a scented candle manufacturing business that produces contemporary lifestyle-focused candles for gifting, self-care, leisure, and home use. The company offers two core product lines, vanilla and lavender, to meet different customer preferences while maintaining consistent quality and pricing. Production is carried out at its facility in Bangsar, Kuala Lumpur, using soy wax, cotton wicks, fragrant oils, and attractive packaging. Products are mainly sold through online platforms such as Shopee, Instagram, and TikTok Shop, supported by selected pop-up marketplaces. So, why this business is viable? Firstly, scented candles are low-cost discretionary products, making them affordable even during economic uncertainty. Next, growing awareness of mental well-being, stress management, and home-based lifestyle increases demand for aromatherapy products. Moreover, the industry allows strong product differentiation through scent, design, and branding. In addition, low startup costs reduce financial risk. Lastly, scalable production supports business growth, and healthy profit margins make the business financially sustainable. Now, I will talk about managerial accounting objective in Bernzi Sdn Bhd. Firstly, industry overview, growing focus on wellness, self-care, and home decor, rising demand for aromatherapy and gift products. Next, competitive landscape, mass market such as IKEA and Amazon, low cost, high volume, boutique brands, strong branding, and customer service. For Bernzi's competitive approach, cost-efficient sourcing of quality materials, and focus on online sales and pop-up markets. Next, target market. For primary market, Gen Z and millennials, and for secondary, working adults 36 years old until 50 years old. For role of managerial accounting, they support planning, cost control, and pricing, and helps monitor budgeting performance. Next, for required startup capital for Bernzi, total estimate startup RM62,000, equipment purchase RM50,000, candle making machinery and tools, minimum cash balance RM35,000 to maintain liquidity in early operation, round up to allow for contingency, ensuring the business is financial viability and scalable. For budgetary process, participative budgeting, lower level managers prepare budgets and review by senior management. What's the benefit? More realistic and achievable targets, better coordination, reduce risk of large variance, improve overall planning and control.
Hi, my name is Sarah Irina. I will explain about 5.0, role of big data analytics. Firstly, enhance sales forecasting by analyzing past trend, customer behavior, and market data. Secondly, optimize production and resource allocation, material, labor, and overhead. Other than that, improve cash flow and inventory management. Lastly, enable real-time variance monitoring and corrective action, making the master budget a dynamic and effective tool. Next, I will explain 6.0, development of comprehensive master budget for financial planning, control, and risk assessment. First, 6.1, sales budget of Bernzi Sdn Bhd for the quarter January until March 2025. Based on the table provided, so the total sales revenue for quarter is 297,900. Second, I will explain 6.2, production budget of Bernzi Sdn Bhd for the quarter January until March 2025. The information for production budget is Bernzi Sdn Bhd offer 2 fragrant candle line, vanilla 60% of production and lavender 40%, with vanilla in higher demand. Based on the table provided, unit to be produced for January is 2,440 units, for February is 2,244 units, and lastly for March is 2,436 units. Furthermore, I will explain 6.3, direct material budget of Bernzi Sdn Bhd for the quarter January until March 2025. The information for direct material budget are the ending inventory is based on 10% of the next month's production need, and cost of direct material is RM50 per pound. Based on the table provided, material to be purchased for January is 1,332, for February is 1,132, for March is 1,226. So the material to be purchased for quarter is 3,490. Other than that, I will explain 6.4, direct labor budget of Bernzi Sdn Bhd for the quarter January until March 2025. Based on the table provided, the total direct labor cost for January is 3,660, for February is 3,366, for March is 3,654. So the total direct labor cost for quarter is 10,680.
Hi, I'm Shamsaid and I'll continue on discussing the next part, which is 6.5 manufacturing overhead budget of Benzis Sdn Bhd of the quarter January until March 2025. Total manufacturing overhead for January, as we can see, it is 9,580 ringgit. For the next month, which is for February, it is 9,980 ringgit. And for the March, it is 10,372 ringgit. So it makes the total for manufacturing overhead for the quarter is 29,940 ringgit. Next, I'll present part 6.6 selling and administrative budget of Benzis Sdn Bhd for the quarter January until March 2025. Information about this is variable selling and administrative expenses are RM 1.50 cents per unit. So fixed selling and administrative expenses are 8,000 per month, and the 8,000 fixed expenses included RM 250 ringgit in depreciation expenses, which is 20% per year. For cash disbursements for January, it is RM 10,750 ringgit. For February, it is 11,050 ringgit. And for the next month, which is March, the total is 11,380 ringgit. So the total for the quarter will be 33,180 ringgit. Now let's continue with 6.7 cash receipt budget of Benzis Sdn Bhd for the quarter January until March 2025. Information about this is 70% is collected in the months of sales, and the balance, which is 30%, is collected in the months following the sales. For total cash collection for January, as we can see, it is 63,000. For the following months, which is February, it is 96,300 ringgit, and for the March, it is 105,930 ringgit, which make the total for the quarter is 265,230 ringgit. Jumping to the next one, which is 6.8 cash disbursement budget of Benzis Sdn Bhd for the quarter January until March 2025. Information about this, which is Benzis pays 50 ringgit per pound for its materials. Second one, 60% of month's purchases are paid in the months of purchase, and the balance of 40% is being paid in the following months. No discounts available. Borrows on the first month and repays loans on the second month, and pays a cash dividend of 3,000 ringgit in March. Purchases equipment in January and paid in cash. For total cash payment for materials in January, it is 11,988 ringgit. For February, it is 18,180 ringgit. For the next month, which is March, the total is 17,836 ringgit. So make the total for the quarter is 47,994 ringgit.
Now, let me continue with our cash position because liquidity is everything for a growing business like Benzis Sdn Bhd. For the first quarter of 2025, we maintain a minimum cash balance of 35,000 ringgit Malaysia, ensuring we're always operationally secure. In terms of inflows, our cash collections grow steadily from 63,000 ringgit in January to 96,300 in February and 105,930 in March, giving us 265,230 for the quarter. On the outflow side, our main expenses are materials, labor, manufacturing overhead, and administrative costs, totaling RM 166,794 for the quarter. We also made a one-time equipment investment of 15,000 and paid 30,000 in dividends, showing confidence in our profitability. Even with financing activities early in the quarter, we end March with a strong cash balance of RM 98,206, which highlights our ability to manage cash efficiently while still investing in growth. Moving on to our production efficiency, this slide shows our cost of goods manufactured. Our direct material usage remains well controlled, totaling RM 53,400 for the quarter, while direct labor costs are 10,680, reflecting a lean but effective workforce. Manufacturing overhead stands at 29,940, covering essential production costs without unnecessary excess. As a result, our total cost of goods manufactured for the quarter is RM 94,020, with monthly production costs remaining consistent, around RM 30,000 to 32,000 per month. This consistency tells us two things. First, our production process is stable, and second, we're operating with cost discipline, which is crucial as we scale the business moving forward. Next, let's look at how our production translates into actual sales through our cost of goods sold. Starting from the RM 94,020 cost of goods manufactured, we carefully manage our finished goods inventory to avoid overstocking while still meeting demand. After accounting for beginning and ending finished goods inventory, our total cost of goods sold for the quarter is RM 87,270. Month by month, COGS increases from RM 25,600 in January to RM 32,080 in March, which aligns with rising sales volume. This upward trend signals growing demand for our products, while inventory remains under control.
Overall, this tells investors that Brinzi Sir Dan Berhad is not only producing efficiently but also selling effectively, converting costs into revenue in a sustainable way.
Hi, my name is Muhammad Muaz and I'll be explaining the budgeted income statement of Brinzi Sir Dan Berhad for the quarter month of January until March of 2025. So, for the quarter, during those 3 months, Brinzi has collectively achieved RM297,900 for the sales. After deducting RM87,270 for cost of goods sold, we will get the gross margin of RM210,630. Deducting selling and administrative expenses, the net operating income would be RM177,450. And then deduct the interest expense of RM229.78 as a result of borrowing to achieve the net income of RM177,220.22 for the quarter. Moving on to the budgeted cash flow of Brinzi Sir Dan Berhad during the quarter of those first 3 months of business. Starting from the top, cash flows from operating, the amount is RM265,230. For cash payments, we will get the total amount of RM122,023.78. The net cash flow from operating activities will come to RM143,206.22. Below is the cash flow from investing activities, consists of purchase of equipment at RM15,000. And then, the net cash flow from financing activities is RM30,000 for the quarter. At the bottom, the net increase in cash is RM105,836.22. Balance in cash beginning is nil because Brinzi just started the business, and by the end of the month, the business had RM98,206.22, which sums up for the quarter. I'll proceed by explaining the budgeted balance sheet of Brinzi Sir Dan Berhad as of 31st March 2025. If you take a look at Brinzi's balance sheet at the top, which is the non-current asset, consists of equipment at the net value of RM14,250 after deducting its depreciation for those 3 months. On current assets, Brinzi has a total of RM140,326.22. So the total amount of assets is RM154,576.22. Brinzi has only current liability, which is RM7,336, and equity at RM147,220.22. Add the liability and equity together, we would get the amount which is similar to the total amount of assets.
Hi, my name is Majid Iman and I will be presenting about the activity-based costing for Brinzi Sir Dan Berhad for the quarter ended 31st March 2025. The total manufacturing overhead is RM29,940, and by using ABC, overhead is divided into 5 different activities, which is the first one is machine processing, setup, mixing and pouring, quality control, and also packaging. So each activity uses a different cost driver, such as the machine hours, production runs, unit produced, inspection, and also orders. So by dividing each activity cost by its cost driver, we obtain pool rates like RM2 per machine hour, RM100 per setup, RM1 per unit, and so on. So all activity costs add up to RM39,940, confirming the accuracy of the ABC allocation. Moving on, Table 2 shows that each activity cost is assigned based on actual usage of cost drivers. For example, Vanilla uses 2,400 machine hours, while Lavender uses 1,600 machine hours. So machine processing costs are allocated proportionately. The same approach is applied for setup runs, unit produced, inspection, and also orders, ensuring overhead is traced based on activity consumption rather than volume alone. So when all activity costs are added, Vanilla received a total overhead of RM70,964, and Lavender received RM11,976, giving a combined total of RM29,940. So moving on to Table 3. Table 3 shows that when these overheads are divided by production volume, both products have an overhead cost of RM4.21 per unit, confirming a fair and consistent allocation under ABC. So in summary, based on the activity-based costing, Brinzi Sir Dan Berhad allocates its total manufacturing overhead of RM39,940 by tracing costs to key production activities such as machine processing, setup, mixing and pouring, quality control, and packaging. Each activity is assigned an appropriate cost driver, and overhead is allocated to the Vanilla and Lavender product lines based on their actual consumption of these activities. The results show that although Vanilla and Lavender candles differ in production volume, both product lines incur the same overhead cost per unit, which is RM4.21. This is because overhead allocation is is proportional across all activities, with resources such as mixing, quality control and packaging applied uniformly per unit, while machine processing and setup costs are distributed according to the production proportions. As a result, the ABC analysis indicates no significant difference in overhead intensity between the two products, confirming that both are equally cost efficient from an overhead perspective.